Hello everyone. Today let us know a hypothetical case study where we have taken here five different banks. These are imaginary banks, and we have taken some imaginary figures so that we could identify frauds before it could have occurred. Like we can see some of the red flags, by looking at which we can see whether these things can take us to a bigger number or we can take us backwards. So let's see one by one what are the banks and how we can identify the fraudulent activities. This is a number which tells us about so this is the number which tells us about how DTA were overstated. So here if we say that we are calculating DTA based on tax rate and NPA that is taken as a provision. So when we multiply these things, then we can calculate the DTA which was overstated by ABC bank. So this is another bank which we have taken as a example, which is a genuine bank where RO is genuine over here. So this is a bank. This is ABC bank. We are in the coming case studies. We are taking ABC bank as a fraudulent bank, which is committing a fraud in the year between the year 2015 to 2019. So let's see some of the financial statements and some of the reports where we can see ABC Bank had committed fraudulent activities. Let's go one by one. So this is an executive summary where we can see some key findings. Like this is a ABC Bank DTA overstated. As I mentioned earlier, this is the DTA overstated by ABC Bank, which should be around 1040 crores, but they have stated around 1493 crores. So, and this is the genuine number of HDFC Bank, or we can say Bank 2. And this is about in 2013 to 2018, what were the NPA that has been raised in banking sector. In 2013 to 2018, NPAs were around 1.78% to 4.74, but our ABC Bank has increased it and it was around more than 5%. So in the coming slides, we'll get to know how it is done. So this is a DTA absolute, like this is a actual figure, an estimated figure, which will tell us about how Bank 1 to ABC Bank have overstated or actual stated their DTA. So these are some of the, this is bank, purple color denotes Bank 1, yellow color denotes Bank 2, and our red color denotes ABC Bank, which is a fraudulent bank in this coming case study. So this is a linear graph which talks about how total assets were used and how DTA were overstated. The threshold was around 0.5%, but DTA was overstated in these coming banks. And ABC Bank, we can see here that in before 4, the line was here. We can see that this line was a straight line till 3, then in 4 it increased a little, then in 5th year what happened, it rose like this. This is because of the DTI overstatement. So this is a small example from which we can say how DTA is overstated. So ABC Bank's expected versus reported DTA. So here we can see the blue color denotes the reported DTA in their financial statements, and the green color bar shows us the expected DTA. What were their expected DTA? And then the red color shows the over recognition, like how they overstated their DTA. For an example, we can take an example of, if you look at this here, this is of 2019. So in the bar graph, let's look at 2019. Let's say this is a 2019 bar graph. So this is a expected figure. Expected figure was around 1040 crores. Then they reported it as 2533 crores. So they overstated it around 1493 crores. So my dear friends, this is the figure that I stated in my first slide. This was the overstated DTA, because of which they were meant to be paid more tax, but they showed that my DTA was more, but because of which they reduced their tax as well and they enjoyed their profit. But by the year 2019, people got to know that Indian banking system's total NPA provision was around 1.724%, but their DTA and provision is rising more than 5%. So this is not technically possible. So from numbers, we can get to know that because of these things, these are some of the red flag indicators from which we can see that this bank will commit a fraud in coming years. So this is a linear graph where we can see that here we are explaining about the ROE. So before going to this graph, I want to tell you something. If ROE is good or it's increasing, we can't say that the company is doing better or good, because ROE has many things. Like we can take an example of ROA and equity multiplier. If ROE is increasing because of ROA, then we can say that it's a good indicator. But if equity multiplier is increasing and that has an impact on ROE, then it's a bad thing, because that company is totally dependent upon the leverages that are having. So that doesn't have a free cash with him, or that, with that company, it's dependent upon the external sources. So the same thing happened over here. Here we can say that ROE has increased, but not because of ROA, but because of increase in equity multiplier. When equity multiplier is increasing, it has a good impact on ROE, but this results that this particular ABC bank doesn't have its free cash flow with them. They are dependent upon some other sources, because of which they have a lot of money as a loan. We can say in natural words that it's a loan, not a money that they are generated from their revenue. So because of which they stated that their ROE will be 14.1% in 2019, but their actual ROE is decreasing here. In the coming days, we can say that when SEBI or when other regulatory bodies go through their financial statements, then they can get to know that this is actually a loss-making company. So here we can see what is ROA and equity multiplier. As I discussed earlier, ROA has a good impact. ROA and ROE has a straight line relationship with each other. As if ROE is increasing and if ROE is also increasing, that means that it's a good indicator. But it's a vice versa thing with equity multiplier. Equity multiplier tells us if equity multiplier is increasing, that means that we are dependent more on external sources for our funds. So this is what the bar graph is explaining us, that higher is equal to more leverage. Like in 2019, the example that I took, that is ABC Bank, is having more equity multiplier. That means it's overly leveraged over external sources than its own fund. That's what the graph indicates here. It's a straight line like this. So the pie chart tells us about, we have taken five different banks. So the pie chart tells us about how each bank has distributed its DTA and NPA provisions. So this chart tells us easily like how CASA ratio was distributed, how a bank distributes its loan. Like if a bank gets a loan of, if a bank gets a loan of 100 rupees, how it is distributed. In our case, ABC Bank, we are taking an example of ABC Bank, where 100 rupees is distributed in this ratio. Like 19 rupees will be distributed to infrastructure, then 32 for corporates, then SMEs will be given around 11 rupees, and retails around 28. If ABC Bank gets a deposit of 100 rupees, then this amount will be distributed in such a way that it could get money recovered back from these different categories. But what happened was they were more focused upon infrastructure and corporates. Because of this, infrastructure made a SPV, special purpose vehicle, because of which they can easily fraudulent the bank, and more NPAs were created in this era. So in 2019, we can see that their equity multiplier increased, so that they were giving more and more loans to their infrastructure and corporate banks, because of which their equity multiplier increased, and their NPA also increased, because of which they made a fraud of around 11,000 CR in 2019. This was an assumed figure, and this is about asset quality metrics and profitability, like what are their ROE and net interest margin, how much interest that they are earning from the margin that they are received. This is the bank's NIM and ROE. So this figure tells us about CASA ratio and term deposits. Like if a bank gets a deposit of if a bank gets a deposit of 100 rupees, in this, how much is distributed towards CASA ratio, like current account and savings account, and what amount is distributed towards other term deposits, like fixed term ratio, fixed deposit, or we can say recurring deposits, what are distributed towards them. So this ratio talks about how a particular deposit is distributed among CASA and term deposits. So this is a conclusory slide. Which here we can say that what are the red flags that can indicate us regarding the early warning systems. Like we can see ROE, DTA and provisions, PCR. Like ROE, as I told you earlier, because of ROE and DTA, we can easily get to know whether that bank is making real profit, does it have real money with it, or it's only good in its balance sheets and it doesn't have good profit with it. So because of this, some of the red flags and some of the indicators, we can easily indicate whether that company or a particular sector has good money with it or not. Thank you, Nindon.